Investment banking. Let's separate investment banking from all other banking. April 18, 2017. I'm Gopalan Ramachandran. Ramach to my associates and to my friends. My email indoiowan@gmail.com and my Twitter @ramachgramach. This presentation reinforces the positions of President Donald Trump, Senator Elizabeth Warren, a Democrat, Senator John McCain, a Republican, and Mr. Gary Cohn, the head of the National Economic Council. Indo-Iowans learned and taught banking, economics, financial markets, investment banking, securities, asset management, and public policy and competitiveness at the University of Iowa, Iowa City, Iowa, United States. The University of Iowa, a great place to teach, a great place to learn. In the American Midwest, the University of Iowa. The Iowa Alumni Network includes lenders, insurers, and investment bankers. America needs to go back to the world of Glass-Steagall. America's regulations should separate lenders, investment banks, and insurers from one another. The Gramm-Leach-Bliley Act of 1999, GLBA, repealed part of the Glass-Steagall Act of 1933. GLBA removed the barriers that separated commercial banks, investment banks, and insurers. Triggered by the acquisition of Bankers Trust, an investment bank, by Deutsche Bank in 1998. Triggered by the merger of Citicorp and Travelers an insurance company, in 1998. The resultant company, Citigroup, which ironically spun off Travelers in 2002. Gramm-Leach-Bliley Act of 1999 brought together commercial banks, investment banks, and insurers into one legislative framework. We need to act on Gramm-Leach-Bliley Act. We need to set commercial banks free, we need to set investment banks free, and we need to set insurers free. So that this is what we would have, the result. Commercial banks will do what commercial banks ought to be doing, investment banks will be doing what investment banks ought to be doing, and insurers will do what insurers ought to be doing. Going back to the world of Glass-Steagall is not regulation. Going back to the world of Glass-Steagall is actually deregulation. Going back to the world of Glass-Steagall will make depositors and lenders safer than they are now. Going back to the world of Glass-Steagall will set investment banks free from a raft of inappropriate regulations. Yes, the change will set investment banks free. A return to the world of Glass-Steagall will set investment banks free from a raft of inappropriate regulations. Commercial banks, investment banks, and insurers have very different business models. They're very different risks. They're very dissimilar capital requirements. That's the logic. Putting all these three things together into GLBA was perhaps inappropriate. We need to work on that. Investment banks do not live on deposits. Investment banks are not lenders. Investment banks do not live on premiums. And they do not bear risk. They do not compensate risk. Investment banks show us the market, of course, and they make recommendations. But we act on these recommendations. We go to the market on our own volition. Investment banks do not touch our money. It's we who take the money into the markets. Investment banks do not decide. We make the decisions. We make the investment decisions. We decide what bonds to buy. We decide what equities to buy. We decide when to buy what bonds, and we decide when to buy what equities. All risks belong to us because all capital will belong to us and all the returns will belong to us. Therefore, investment banks deserve to be unshackled. Investment banks deserve to be unshackled. Thank you for your time. I'm Gopalan Ramachandran, Ramach. My email indoiowan@gmail.com and my Twitter at ramachgramach. There's more to come. Thank you.